From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 24th, 2015. In just a moment, I'm going to be taking a look at the GBPUSD, the Greater British Pound, versus the US dollar for today's video analysis. But first, I want to recap a couple of the trade suggestions that were made yesterday. Of course, on the USDCAD, the US dollar versus the Canadian dollar, yesterday's morning video, the suggestion was to buy while the market was up here in the green shaded area, sitting on top of our triangle pattern, the red trend line coming down from the top of our triangle pattern over the past 3 days. Wednesday, Thursday, and Friday of last week, we saw support into the green shaded area, into the mid to low 1.2500s, and the market held there and bounced back up a couple of times. So we were looking for that similar support to hold here into the green shaded area yesterday. It was very short-lived support, went up just a small amount, and then came right back down and now drifting a little bit lower. And I still think we're in that same expectation. I still think along the blue trend line, we still see rising lows from the triangle pattern. You can see that along that blue trend line, rising lows. And the pattern hasn't really changed. We've just pressured down into the next support. So I believe today, even still, even though we got stopped out of that trade from yesterday and the buy at the green zone, I think even still, as long as we stay above the purple shaded area, we're going to look for some support today. Now that, of course, will change, just like yesterday, if it breaks down through the support. But clearly, the purple zone has held as support into the 1.2430s, even as deep as 12400. We have seen support here into the blue trend line, the rising lows, and into this purple shaded area for the USCAD. So continuing to watch for support, continuing to watch for a potential reversal here for this to go back up, and that will all change. Of course, if it breaks down through these lows, we'll change our mind and start looking for this to continue to pressure lower for the USCAD. Another currency pair that we were looking at yesterday was the US yen. Along the green trend line, we see the rising pattern here, and it's been a rising pattern for quite a long time. We've studied the didn't mean to grab that line. We've studied this pattern of the trend, the green trend line coming up from the bottom, the fall into support on the first circle, and then the rise, the fall into the second circle, then the rise, and now we're in that third incarnation of the pattern where it's come down into support, the green shaded area, and now potentially it turns back around and goes back up in the direction of the trend. Now, of course, it is under the green trend line right now, but remember, the trend line is just a visual interpretation of what the trend is. The pattern is still the same. We still see rising lows. We see this first circle, the second circle, and the third circle is still higher than the middle circle. So the pattern is still there. Rising lows along the green trend line, it's still there. So I still think we could look for some support here into the green shaded area and a rally back higher. But clearly a breakdown there goes lower. The 100-day moving average coming up from the bottom also coming into play as a potential clue to support as it approaches down close to the 119 level. Zoom it down to the 4-hour chart. We'll still watch for that. I am in a buy from yesterday's trade suggestions from the trade room. 119.40 or so is the buy, looking for this to reverse and go back up again, sitting right now right at the entry point from yesterday's trade suggestions. So in a buy, looking for that reversal and the continuation of the pattern of that daily trend that we've been following for the past few days. Okay, that's a couple of trades from yesterday. Let's take a look at the GBPUSD, Greater British Pound, versus the US dollar. Let's first off start out here on the daily chart. I think it's important for us to realize we are still well within the confines of the overall downtrend. We can see that here, the blue trend line, the 100-day moving average coming down from the top. We're still well within the confines of the overall downtrend pattern, and we're even holding underneath our major resistance. In fact, if I go over to this other chart, and we studied this yesterday in the trade room, I pulled up a clean chart. It didn't have any other lines on it, and if you go out to the daily chart, you can see we studied this in length with very little indicators, no other lines here. So you can see the longer term trend line. This one would have been the blue one. Let me change that to blue like it was on the other chart. This is the blue trend line, long-term downtrend. I don't have the moving average on here, but I think you can understand it was along that blue trend line. We have seen rising lows along the green trend line, but clearly the blue shaded area here has capped the market over the past few days. So you can clearly see that here, confines of a downtrend, and we're bouncing around congestion between the yellow, the green, and the blue shaded area down here. Let's zoom it in a couple of times. Here is our area right here that we're in the confines of the downtrend. We can see this leg of the downtrend. I've taken Fibonacci high down to low. 382 was right at the bottom of this blue shaded area right there. You can see it at the bottom of the blue zone. There's your 382. It's 1.4985. That has 1, 2, 3, 4, 5 days now capped our resistance into the upper 1.4900s. But it's not hard to deny the fact that we have seen rising lows over the past few days, really since that FOMC announcement last Wednesday. So what I'm going to be looking for today, since we're clearly not near our resistance, this is our resistance up here at the blue zone. We're clearly not near the resistance, and we've seen a rising low pattern. We will look for opportunities into support into the rising low pattern that we've seen over the past few days. That way, if the trend is bound to continue and eventually pressure back through the blue shaded area and reverse here for this pair back up maybe towards the blue trend line, then we're looking to take advantage of that. So the green zone becomes an intraday opportunity to buy in the direction of our current momentum and looking for that continued dollar weakness that has begun since last Wednesday. Now, clearly, we can define our risk because the risk is that it breaks that green zone and goes back down in the direction of the downtrend. Let's take all that down to the 4-hour chart. Staying on this chart here, we can see that here on the 4-hour chart, the rising low pattern. I put the green trend line there during the trade room yesterday. You can see that rising low pattern. So again, we don't really want to look for a sell because your sell opportunity is closer to the blue shaded area, the 382 fib, and the 1.4980. So we're nowhere near that. We're 80 pips away from that resistance high. But we're getting closer as the market pressure is lower down here towards the 4850 level, which is our next support and along that rising trend line. We could even take some Fibonacci in here, but I think it's going to be difficult. Where do we take Fibonacci? Do we take it from the low to the spike anomaly high from FOMC? Or do we take it from this low to this high? I think all of that's going to put some Fibonacci right here into the green shaded area. No matter which high to low that you choose to draw Fibonacci, the green shaded area will likely become some potential support. And even along that rising low pattern that we see here for the pound dollar. So the closer we can get, I think, to the 1.4850 level becomes the opportunity to look for a support and a buying scenario. Might be a little bit higher than there because if it's going to continue to have a rising low pattern, it could be here into the 4880 level. So that's what I'm going to be looking for. A little bit higher than the green zone, looking for our support along the green trend line, looking for it to turn around and go back up. The risk is clear. The risk is that it breaks down through this green zone and starts going lower. Of course, our targets will be the blue zone or higher if it goes higher and breaks above that blue shaded area. So this is what I'm going to do. I'm going to set up a buy order here for the pound dollar. I'm going to set it at half size because clearly the market's in a decision point. Is it going to go up? Is it going to go down? Down in the long-term downtrend, continue up in the short-term pressure. So at least at this point, I'm going to use half size on my trades. I'm going to go ahead and put it at 4880. 4880. That's just above the green shaded area into the green trend line as it would approach that green trend line, 4880. And my stop loss is going to go down to 4815. 4815. Now you might say that's a pretty large stop loss, but remember we're trading half size on the trade, so it reduces our risk in half by trading a smaller size. So we can put a little bit hair size larger stop loss on it. So 4815 becomes our stop loss. That's down just underneath our green shaded area. So we place that in there. So buying into 4880, stop loss 4815, just under the green zone. We'll look for that to be our support for the day today. We'll target the blue zone or higher. If it breaks the green zone, of course, we'll look for a return of the downtrend pressure for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.